Hello, welcome back to Core Finance. I'm Matt Brown, joined by Craig Erlam, Senior Market Analyst at Oanda, and we're going to be looking at gold. Always believe in your soul. It's out of favour at the moment. What's going on here?
I think there's a couple of things going on. We have seen a little bit of dollar strength recently. I think all this talk of tax reform, the progress it made through the Senate, and now the fact that we're seeing this joint committee, now the Senate and the House, try to amalgamate their bills in some way and make it fit and get something that can pass through both chambers and therefore finally get signed off. I think that's helped to support the dollar a little bit, and that ultimately weighs on gold, being a commodity that's priced in dollars and primarily, I'd say, driven by dollar, at least as one of the key factors. I think we've seen that just this, again, improvement in risk appetite is typically bad for gold. I think the only reason we're seeing at these kind of elevated levels is because there is a bit of some geopolitical risk bubbling under the surface. But I think it's starting to weigh on it a little bit. But I mean, at the moment, you can see we've got this clear sideways trend happening. We're between 1260 and 1300. We have been now since late September. But we are testing now those kind of 1260s once again. There seems to have been a bit of momentum built up to the downside. The previous support zone is now combining with those 200 and 233-day simple moving averages. So should we see a break of that, then that would be quite a bearish signal, and I think then we'd be looking back towards the kind of 1240 region, which you can't really see on this chart, but earlier on this year, 1240, 1260 were very notable zones for this. So 1250 always stands out as a nice round number. The gold does tend to respond to the 50s, and you can see that it did here back in August as well. But for me, if we see a breakthrough 1260, then 1240 is going to be your next potential chop zone, I'd say, because I don't think we're going to see a big drop off in gold at the moment because of things that are still bubbling away, and I don't think we're going to see a massive resurgence in the dollar anytime soon. So it wouldn't surprise me if we just find a new chop zone for 1240, 1260, should the 1260, of course, break in the near term.
And Bitcoin. Do you think it's, as it says here actually in CTM, Bitcoin taking the shine off gold? Is Bitcoin as good as gold? No,
ultimately, not yet. It could be. If Bitcoin becomes, say, a new reserve currency in the longer term, then of course it could become a new replacement for gold. It'll never have its intrinsic value, being the actual physical commodity. But if it does become a well-adopted alternative currency and an alternative means of exchange, then yeah, sure, it could take some of the shine off gold. But I think right now we're still in the very early stages. There's still a long way to go for Bitcoin. There's still many sizable hurdles, not least central banks and governments who are going to be unwilling to allow it to easily pass through as an alternative currency that they can't control. But at the moment, I think what we're seeing in Bitcoin is driven by two things. One is that we are seeing things like futures appear, CBOE, CME, and the other one is speculation. And I don't think it's any surprise that last weekend, weekend 2 weekends ago, it appeared on the front page of every paper as it was approaching 10,000, and it jumped $3,000. Well, what does that tell you? I mean, I think there's so much speculation right now. That's not to say it can't continue, but as a means of gold replacement, I think we're some way from that yet.
Good stuff. Well, in the meantime, Craig Erlam, Senior Market Analyst at Oanda, thank you very much for joining us.
Thank you.